Hi folks, welcome to this special video. Do read the disclaimer fully. Today we're going to do the Ask Weekend Investing round. Every end of the week we do this question and answers round. We've done 68 rounds before. We've covered almost 1,000 queries, and we try to answer all your queries to the best of our abilities. Of course, please subscribe to our channel before going ahead, and let's dive into the questions straight away. Safal says, what criteria can be used to decide the percentage allocation of precious metals in a portfolio, and how should that allocation be divided between gold and silver? Is this percentage dynamic, and would that be helpful? So my thumb rule on this has been that whatever is your net worth, your age divided by 2 should be the percentage of your net worth in precious metals. So if you are 30 years old, maybe a 15% allocation. If you are 60-year-old, maybe a 30% allocation. That's the thumb rule that I would think, at least in today's world, makes sense. But a lot of people have their own, uh, allocation thumb rules. Dynamic thumb rule is difficult. It will depend upon your strategy. What you can do is rebalance the portfolio every 6 months or 1 year, so that your weights come back to where you intend them to be, unless you have a strategy where you've properly tested that strategy and you are able to dynamically allocate to that ratio. We have a strategy which dynamically allocates to gold and equities, in the all seasons strategy. You could look at that. Um, that is helpful, but again, without having a proper structure to it, I would not recommend you to do that. Between gold and silver, I think gold can manage that task very well. There is no need for silver. But if you really like silver, perhaps, 2/3, 1/3 can be the allocation. But my suggestion is always on gold, because gold has a monetary angle to its demand. And that is the reason that you would want gold in your portfolio. The day central banks start to accumulate silver, I think that will be the time where some silver allocation necessarily would make sense. Sukrit Gupta says, how does momentum strategy work in the current type of market when index is nearing all-time high and almost every sector stock tries to make a new high? Would there be a lot of churn in the portfolio? So right now, as the indices are trying to make all-time high, a lot of stocks are still, much lower than their all-time high. So from that point of view, this scenario that you are painting is not what is happening. But yes, there can be a lot of churn in the portfolio when the markets are range bound, and when stocks are trying to lift off, but then they are nipped in the bud. That move gets aborted, and then you have to move to the next stock. So whenever there are strong trends in the market, there will be less churn. Whenever there are mixed trends in the market, there will be more churn. How does a momentum strategy work when a stock makes an all-time high? Then it does time consolation and then rallies it a bit. Will the momentum strategy discard it when? So I'll just sum it up in this way that, uh, let's say you are into a stock and that has strong uptrend. So either that uptrend fails, or even if it consolidates and then after a certain time of consolidation, if the move doesn't come, the strategy will discard it. So that's how these strategies will work. Um, Ankit says, bought lump sum in gold at 1.1L, made it about 10% of my portfolio, holding on to decent profits right now. Not sure if I sell for short term gains, hold as it is, or keep accumulating more through SIPs. My suggestion here would be, unless you are in need of money in the next, let's say, year or so, um, look for long term positions. Gold, real estate, and even stocks, these are asset classes that can give you short term gains only when you're lucky. Otherwise, these are by design long term, as long term vehicles for gains. So if you get short term gains and you need the money, certainly take some off the table. But if you are building your corpus for the long term, you don't need the money, then don't look for trying to time the market in getting out and getting in. That usually will not help most people. Samar says, is it okay to have invested in products of different investing styles? Yes, that is fine. I mean, there's no issue about it. Does it lend balance from a diversification point of view? Some people say it lends a lot of balance. I'm not so sure, but if it satisfies your uh, inquisitiveness, that I have some money in this bucket, some money in that bucket, and hence I'm getting diversification. Sure, I mean, by all means. Uh, B is it necessary to identify one suitable style and gradually identify which style is comfortable and move all investments there? That is ideal. So because you want to have complete conviction over what you're doing. You don't want to be in a situation where you are investing but you're not sure. So if you are, let's say, very convinced about momentum style, then there is no problem putting all your money in momentum. There's absolutely no problem. But if you're not so convinced, you want to try out for some time, then yes, you can try out different strategies for different periods of time. But eventually, I think it should it should sort of culminate into a one strategy which you have complete confidence on. I think that is something that my journey has gone through. That I've tried everything gradually, and over a period of time I realized I'm most comfortable with momentum investing. uh, will it eventually become a challenge from a behavioral point of view to emotionally tune yourself to various styles at different stages of the market? Yes, that is exactly what I was alluding to. That let's say there's a market crash. Now, momentum strategy, either it will go to cash or it will go to, whatever is the least damaged within that particular cohort. Other strategies that you may have, basically, you will be left guessing, what will I do now? My has gone from 100 to 20. Should I just keep waiting? So this whole approach of having, the four questions answered: what to buy, when to buy, how much to buy, and when to sell. That is most important. If the other style also has a similar structure and a proper framework, then yes, by all means. But if it is a hope trade, then let's buy the stock and let's hope that in 10 years it will get there. I think that is a not a sure shot, but a lot of folks will have a lot of failure in that approach. So from that point of view, it is great if you are able to identify some style that fits your psychology, that fits the way you think. uh, is it possible to have a hands-off approach? Yes, of course. You can always, once you have decided that I like this manager's style, or I like this way of working, then you can just offer your money to them and they'll manage it for you. Aniket says, on which dates of the month the all season strategy will be rebalanced? So, all season strategy is a monthly strategy. So, the first trading, sorry, the last uh, Friday, if it is coinciding with the last day of the month, then the rebalance is pushed on that day. Otherwise, it will be the first weekend that comes in a month where the all season strategy will be rebalanced. How frequently the rebalance of all seasons will be? So let me reiterate that it's a bi-weekly rebalance. So if the previous month it has started middle of the month, then there'll be one at end of the month, then the next month it'll be nearer to the middle of the month. So you need to see 2 weeks, 2 week hops on the all season strategy. So it is not necessarily going to happen in the first week or the last week. Uh, the second part is how frequently the rebalances will bring the weights back to the normal levels after one of the component goes off compared to the other. So all seasons will basically reset the weights each time. So it is as per the dynamic situation of the market. The weights of the two entities that are there will get set. There is no resetting back of the weights back to normal, because the weights will continue to change uh, from each rebalance to the other rebalance. I hope I'm able to answer your question. In case something is left, do drop me a mail. I'll clarify it further. Harsh says, with ETFs being mispriced, commodities and gold funds, what is the best way for having non-Indian exposure? I think direct stocks in the US markets is a great way of having non-India exposure, um, or not even just direct stocks. You can have a direct uh, broker account, let's say through a platform like Vested, and go through that and buy either direct stocks or US ETFs. or a lot of instruments that are available there, or there is a weekend investing uh, strategy that is also hosted on the vested platform, a momentum strategy on S&P 100 stocks that can also be chosen. So there is so many ways in which you can take US exposure. Can we rely on gold to be the proxy for global exposure? No, gold is not a proxy for global exposure. Gold is a hedge against INR. Gold is a hedge against Indian assets not performing well. So gold is a hedge against our own government if that goofs up in some way. So gold is not a proxy for US stocks, for instance. So have gold, have Indian equity, also have US equity to some extent, if you like. I think that mix is very nice if you can have all three. Chaitanya says, are there plans to launch more US stock investing strategies on vested? Yes, we will increase the bouquet of offerings on the vested platform. Right now, we have started with one strategy. Daljit says, in your previous analysis, which assumed index dash slash ETF exposure, how would historical CGR change if the equity allocation was implemented via direct individual stocks instead of broad indices? In your previous analysis, I'm not sure what you're referring to. Was it the recent video that we did on the ETF exposure? Um, So if the underlying was not the ETF but direct stocks, yes, the CAGR will change. If you are referring to the recent video that what we did, but certainly give us more context and we'll be able to answer this better. For the US equity portion, how does the historical CAGR of Nasdaq 100 compare to S&P 500? How do blended allocations 50-50 perform relative? I can't give you these answers offline, off the cuff, in terms of what would be the CAGR if this is the combination. I mean, please uh, have a either download a TV trading view application or some other charting application and see how these different indices have performed and do an allocation of 70-30 and see how they go. I really can't provide these numbers, sorry. uh, Manik says, fan of your channel, hugely benefited from your ideas with respect to gold and momentum. Saw somewhere in your post that your RHR is 46. Seems simply impressive. Would like you to spare a few minutes on that, please. Being a marathoner myself, I'm simply amazed by that stat, and I know it's not easy to get there. Apologies if this question is off topic. So, Manik, thank you so much. But I am not doing anything special, but just I think simple some sports and keeping a regular exercise routine possibly keeps me there. I certainly would love to be a runner or a marathoner, but I don't think I can do that. But I think the numbers are very individual. So somebody may be extremely fit and have that number. Somebody may not be as fit, also has that number, maybe because of their natural makeup. So I don't think it's so exceptional from that point of view. But thanks. Arun Raval says, appreciate your effort and help for us. My question is for silver, your opinion, and do you personally invest in silver, especially considering that having hit its all-time high this month, it might give higher returns compared to gold. So I don't like silver more than gold for sure. Uh, there are family members who like silver also, so we have some silver exposure. Uh, I think the returns over a very long period. See, I'm not buying gold or silver for short term gains. And this is asset allocation for me. This is long term wealth compounding for me. So whether silver does better this year versus gold or gold does better next year versus silver doesn't matter to me. So from all those perspectives, over a very long term, gold and silver will not have too much variation in terms of the return. So it doesn't really matter. But I have more confidence on gold. I have much more confidence on gold because central banks are buying gold and they are accumulating gold. And gold has certain characteristics and uh, a restricted supply, which makes it unique. Um, so from that point of view, my opinion remains biased towards gold. Can there be confiscation risk for precious metals in India as it did in US once? So in India, anyways, I think about, I'm just saying from just a guesswork, maybe 75-80% is anyways, not on the books in Indian households. So if there is any confiscation risk, nothing will be found. So I don't think Indian government is stupid enough to try this. That any government which tries to touch Indian household gold will lose the next election. So that probably will not happen. But having said that, I think investment gold has become a asset class recently, not so long back, and hopefully we will have official more and more official gold being bought through proper channel. Um, Confiscation is extremely regressive. Um, I don't think even US will try it anymore. But of course, you never know what may happen. Um, with gold, the confiscation problem is public solves it by themselves. I mean, let's say everybody has declared gold assets, physical gold, and now let's say government says, okay, I want to confiscate it. Everybody will basically say, sorry, I just lost it somewhere yesterday. So it won't work basically. I mean, how many uh, uh, confiscations can you physically go and do? So it's not workable, and hence I think the government will never tries it. All previous episodes of these Ask Weekend Investing rounds are here in case somebody wishes to do a weekend binge watch of all these episodes. More than welcome. And the description will have the links. Thank you so much for watching, and do subscribe to our channel. Thanks. Bye.